Hi, welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for watching my weekly stock market update for the week of Monday, April 8th, 2019. Before I jump into my charts and commentary, I would like to share with you my quote of the week. And this week's quote is from C.S. Lewis. He once said, "You can't go back and change the beginning, but you can start where you are and change the ending." And those are some very wise words from C.S. Lewis, an amazing author, to say the least in that one. Anyway, I wanted to share with you some information about the economic situation right now because the economy continues to slow down. You wouldn't really notice that based on the euphoria in the current stock market, but it does. It is currently slowing down. In the fourth quarter of 2018, U.S. S&P 500 corporate earnings declined by 20.35% from, let's see, $36.36 to $28.96. So a 20.3% drop in earnings. That is a very steep number for anybody who pays attention to that. And also, we had the biggest liquidation of U.S. stocks in the first 10 weeks of 2019. We had the biggest liquidation of stocks, outflows in equity funds or stock funds that we have had since 2008, as reported by Bank of America Merrill Lynch. So take a look at this chart right here. This chart shows you exactly what I just mentioned. You can see how big that bar is to the downside. So we have a couple pretty serious things going on there. And also wanted to say that most of the stock market jubilation since the Christmas lows has been due to $1 trillion of global money supply expansion by the global central banks. Take a look at this chart. You can see right here, up in this little corner right there, that the global money supply increased by about $1 trillion in the last few months, and right along with it goes the stock market. And in my last videos of the past few weeks, I discussed the U.S. corporate stock buybacks and why that was critical to the stock market. As of my last video, I think we had $286 billion worth of U.S. corporate stock buybacks, and as of right now, this second week of April, we are in a blackout period for stock buybacks of 85% of the companies in the S&P 500. So in a nutshell, that means that for the first 3 months of 2019, corporations were buying back about $100 billion worth of stock every month. That buying did a heck of a job of propelling the largest stocks in the S&P 500 to new highs, and also, well, not to new highs, but to near all-time highs. And as of this moment in April, that buying activity has pretty much come to a complete stop. So I would say that is a cautionary warning, or just that is a warning that just says that you might be on the lookout for some downside in the S&P 500 here in the next few weeks. So right now, I would just use some caution, and if you've been lucky enough to catch this rally since Christmas, it wouldn't hurt to put some hay in the barn and wait for a more attractive time to buy stocks. In closing on this portion of my video, I'd like to share with you John Hussman's chart that just came out yesterday regarding the valuation of the S&P 500. Here's the chart, and you can see that as of 2019 and 2018 for that matter, we are more overvalued in the US S&P 500 stock index than we were in 2000 and in 1929. Take that as a warning that stocks have never been this expensive. You're getting very little value for the money that you're putting into the stock market in the US right now. Now, I'm just talking about the US stock market. Emerging market stock index has gone nowhere for about 10 years. So not all indexes are ridiculously as overvalued as the S&P 500. So if I can be of service in helping you better understand where the value lies out there in the investment world, please let me know. If you're a 401k plan person and you aren't getting any or enough attention in your 401k plan, and you would really like a little bit of advice, then just the 800 number that you're offered through the 401k, please give me a call. You can reach me through this social media page or through my contact information, which is at the end of this video, just before the disclosures. Well, thanks again for watching. Like I said, if you like the technical stuff and my charts, please watch part 2 of this video. Have a great day, and I'll see you again in a few days.